Associate Professor of the University of Nairobi.
Thank you very much, and I'm going to be moderating this session, but maybe the first thing is to call the panelists so that at least we can get going. I thought my name is slightly difficult to pronounce, but actually it's pronounced the way it's written. It's Ndung'u. It's just like a song, Ndung'u. Thank you very much, and let me start with Luke Forau, the Governor of the Central Bank of Solomon Islands. Then we have Jameel Ahmad of the State of Pakistan, State Bank of Pakistan, sorry. And then we have Madam Maha, who is the CEO of Jordan Payments and Clearing Company. And finally, Dr. Iyabo Masha, who is the Director of the Intergovernmental Group of the 24 of the International Monetary Affairs and Development, G24. Thank you so much. We have 4 panelists, and we have slightly over, maybe slightly around 1.5 hours to deal with the subject matter. This subject matter is interesting, but we want to make sure that, first of all, let me deal with the objectives of this session. And the first, because essentially once we know the objectives, then we can dwell on what outcomes do we want to see. Then the questions and even the experiences of the panelists will give us a very good handle in terms of how we should go. And the first objective is actually to discuss how policymakers and regulators can strengthen their laws in terms of supporting employment and economic development goals. And this is very interesting or very important for AFI because we want to see how the mandate of the regulators can be broadened to actually create a scope of, within the existing mandates or even more mandate, to actually create that scope that can create economic vibrancy that creates employment. The second one is to review the mechanism available for policymakers to boost job creation through innovation and collaboration, particularly for those disadvantaged sections of the society. And this has come up several times in this week, especially women, youth, and small businesses. And the third one is to explore the potential of digital financial services and fintechs in creating new employment opportunities. And we have come a long way in this, and somehow it is very, very important to see how our experiences are and how we can strengthen that. And finally, we want to highlight successful case studies and even best practices from various AFI regions where appropriate, and how we can map out those channels through which we can show how employment generation can work out. We have the following expected outputs. First, we want to make sure that we identify concrete actions or even interventions for financial policymakers and regulators to strengthen their role to boost job creation globally, or even at the national level where we come from. The second one is we can provide guidance on how we can leverage financial innovation and inclusion to support employment growth through the channels that have been identified. Third, we want to make sure that we generate recommendations for collaborative strategies between central banks, government ministries, the private sector, and the global partners in this area. And finally, we want to make sure that we identify FE management unit or FE management units that can support the network and members' efforts in terms of initiatives to promote job creation, especially in identified channels and even interlinkages in the economy. That is what we want to do this afternoon. And I want to make sure that while we are doing that, we can actually get some experiences from various panelists, and maybe also once we map out the relevant channels, we can also ask ourselves what is the end result and how do we go about that. I would like to do the following. Let me first of all introduce, although I called the members, let me first of all introduce them very briefly. Look here, Forau is the governor of the Central Bank of the Solomon Islands, and he was appointed governor in 1st October 2019, and since then he has been in central banking since 1999, so he has wide experience in that. The second is Jameel Ahmad, a central banker for the last 31 years. I'm very happy about that. And he's the governor of the State Bank of Pakistan, effectively from August 2022. So we can dwell on that wealth of experience. Madam Maha Bahou is the CEO of General Payments and Clearing Company since June 2018, but he has been in the system and central banking for the last 30 years. I'm sure one of the growing areas of central banking away from the traditional central banking is the payment system. And this is something that I'm sure all the members here looks like they're very familiar with. And finally, my dear sister, Dr. Iyabo Masha, is the director of Intergovernmental Group of the 24. But the most important thing is that he has been an advisor in economic advisory. She has worked as Economic Advisory Council member, which directly advises the economic policy for the president, and a leading member in terms of the international community, where we have our paths have collided several times in our areas of expertise. Thank you very much. Having said that, I want to have a strategy. The strategy is that I would like to give each member of the panel 5 minutes to start with an opening set of statements or set of areas that they think they can dwell in terms of this subject matter. And then after that, I'll come to specific questions. There are about 6 questions that I will ask in a very brief way. But I think we may have to find ourselves repeating ourselves, but we can avoid the repetition. But I think I wanted to give a clear, open statement. I'll make sure that I avoid talking as we go along. I'll take notes so that I can summarize things at the very end. And because I have to restrict myself as the moderator, I don't want to drive the discussion. I would like to hear from each and every person so that at the very end, I can summarize what is our take. But even when I summarize what is our take, this is a major, should I say, area that we want to cover, both in terms of research and empirical work that can help us moving forward. So at least the input that comes from the panelists is going to be very, very important. Let me start the first 5 minutes with my dear sister, Dr. Iyabo Masha.
Good afternoon, distinguished ladies and gentlemen, panelists, and Afi, I thank you very much for being part of this event. I think when one looks at financial innovation and job creating opportunities, what comes to mind is how over the past decade or so, the advancement in financial innovation has contributed massively to the way people work, the way they bank, and the way in which job is created. The way I see it, one is the issue of how the innovations in the sector has enabled better access to finance, both capital for companies, but also for small and medium-scale enterprises, for entrepreneurs. So this expansion in the kind of access to finance, which many of them enabled by innovation, peer-to-peer learning, access to credit, even non-bank financial intermediaries. So that has created a whole new range of jobs, a whole new range of employment for a wider range of people. The other way to look at it is how these innovations have also contributed to the improvement that we see in the financial sector itself. Even the banking system, the brick and mortar banking systems are doing things differently. For many of them, their costs are coming down, and with costs coming down, being able to provide some of these services at lower cost also means that the consumers, the businesses, are now able to employ more people and create further opportunities. One other way in which it is also showing up is what we see in the larger economy. With the innovations in financing, in the access to credit, especially at the very lower end of the economic ladder, we've seen some growth in consumption. And if you can look at it this way, that if this meeting was holding 20 years ago, there will be nothing like a cell phone in this building. But the growth of the innovation, ability to obtain credit and expand consumption also means that companies are now employing more people to be able to meet the demand. Now, let's look at what is happening in the government sector. Many governments are now using fintech solutions to meet their obligations, especially when it comes to social security payments. And as we've seen in, say, in Brazil, for example, where the social security card is also a kind of ATM card. It's the same card that shows whether children are registered in school. And what we see is that some of these beneficiaries of these social security payments are not just living on handouts as they used to. They are now setting up very small-scale industries, small-scale businesses that allows them to do things differently, to employ people, but also for them personally to be engaged in the process. So all in all, I think the link between financial innovation and the job opportunities is very strong. It has not always, it's not always the case that it's creating so much job opportunities everywhere. We've seen areas where there are job losses, either some sectors in which there's a disruption, or the sectors are completely rendered useless. But what matters is the ability of the society to make that transformation, and for there to be opportunities in skills, opportunities in education that would enable people to take advantage of new opportunities emerging. Thank you.
Thank you very much, and that is quite a nice summary. Let me go to Madam Maha.
Maybe it's easier if I take yours.
Just speak. It is automatic.
Okay. All right. I thought I need to press, coming from a country maybe without this technology. Thank you everyone for being here today with us in this session, and thanks to Central Bank of El Salvador and AFI for always bringing us together for good exposure and learning from each other. I will start maybe in a different way, because after what you've mentioned, we are left with nothing to add. But what I studied in the university about the relationship between economic growth and financial development, which one leads to what? Somebody says economic development leads to better financial development, and others financial development brings better economic growth. It doesn't matter which leads to what. What matters is the strong correlation between both of them. So that's when I used to be still at the college 35 years ago. But now we're talking about not only financial development, financial innovation, financial transformation. So imagine how much this technology and the speed of innovative technology is bringing benefits to the financial economy. Definitely, it will correlates to or correspond to better economic development. And recently, the BIS reports and the World Banks, they state that with 1% increase in digital payments, for example, it corresponds to 0.05% increase in economic growth. For example, in Jordan, when I started working for the digital payments department, at that time, only 3% of our payments were conducted digitally. Now, over 45%. So if we can quantify this, definitely, it is very significant and impactful, and definitely it brings to better job creation. Financial innovation is very critical. All innovation, I believe, is like economic growth is fueled by innovation. And what matters today, not only capital, human capital, as much as innovation capacity. So central banks and governments should embrace this to provide better innovative solutions for their customers, to provide them with access to different financial services remotely without the need to spend time and money and the efforts of reaching to the financial services, to get the money instantly so they can input these money into more investments or more into businesses. This definitely will create more job and brings better employment. Although also we studied that there is a conflict and contradiction between monetary policy and job creation. That's like ABC when we studied economics. Central banks are forced and mandated to protect the economy as monetary policy from inflation, even if this might impact negatively economic growth and job creation or employment. But nowadays we are witnessing central banks are taking a different role and not different, additional role and scope in the area of financial inclusion, which has impact on job creation, alleviation from poverty, better economic growth. So all in all, what I want to say, we are shifting from the old traditional school of how central banks are conducting their mandates. Once central banks took the lead in financial inclusion, it became like a new stream of a new mandate to bring as well more of fintech and innovation in addition to financial inclusion, which will yield to job creation and better economic growth. Thank you.
Thank you. Thank you very much, and thank you very much indeed for making sure that there are some relationships that we should watch for and try to see how they are working. Mr. Jameel, I'm coming to you. Thank you.
Bismillah ar-Rahman Rahim. Assalamu alaikum and a very good afternoon, dear friends. I think let me start by saying that we as the central bankers and policy makers have a strong desire to contribute in the process of economic growth and job creation. But when we look at our statutory mandates, in most cases our mandate will require us to focus on price stability. monetary policy and price stability, which obviously in most cases is the primary objective. And in our case, State Bank of Pakistan also, the law requires us to focus on monetary policy and price stability, and we are expected to adopt a stance, appropriate monetary stance, which will ensure price stability, and price stability means is the control of inflation. Then we also are required to contribute in financial stability, and in fact this in our case is the second objective, subject to achievement of price stability, that will have to focus on financial stability. And if we are able to achieve both these statutory objectives of price stability and financial stability, then we can contribute as per law in the economic growth and job creation. Now the question is how to strike a delicate balance between achievement of our core objectives and also at the same time contributing in the economic development of the country, so that we can facilitate the job creation. So it's a very challenging task, I will say. In most of the cases, we will have to adopt a stance, policy stance, which may be counterproductive for job creation. And we have seen this in the case of Pakistan a couple of years back, when we were facing balance of payment crisis. And also we were having high level of inflation. So our policies were focused on price stability and addressing the external account crisis. And in the process, we were in fact taking policies which were counterproductive for job creation. So despite our strong desire to contribute in this process, sometimes the central bankers will have to have a stance which is different from the government policies, and they will have to focus on core objectives. Now, second point, I would like to highlight that over a period of time, we have seen that the nature of and structure of the job market has also evolved. And in our case, for instance, initially we were more focused on agri sector, and most of the jobs were agri economy based. Almost 70% of our population is living in rural areas, and they have job opportunities in that sector. But what we have seen recently is that with the evolution of industrial sector and also services sector recently, so the nature of job market is also changing. So, so from central bank perspective, I think we will have to preserve the main and primary objective of price and financial stability, but at the same time there are other ways through which we can contribute in job creation also. So sometimes the direct policy interventions may not be facilitating us in contributing in economic growth, but there are other facilitative ways where we can contribute in this process. For instance, in our case, we have seen recently the services sector is expanding, and as we have seen that this require a lot of facilitation from central bank perspective. For instance, the freelancers in our case, it's a growing sector for job opportunities for the young people. And since 2/3 of our population is less than 24 years of age, so it's a young population, and they are more tech savvy and will have job opportunities in this sector. So from central bank perspective and from government perspective, we have coordinated with our stakeholders to facilitate this job market. And that's not at the cost of achieving our main policy objectives. For instance, we have facilitated them through the payment services and through innovation and through digitalization of the payment services. And as a result of that, they have been able to receive, for instance, their remittances through the digitalized modes of payment. And it has contributed in their livelihoods. So, so that's another way of looking at the things. And from the job market structure, we also see that, for instance, micro institutions, the small and medium enterprises, e-commerce, freelancers. So these are the growing areas of job market. And traditionally, in the past, when we were not facing the policy constraints, so we were contributing directly. for instance, by offering concessional financing schemes to some of these sectors. And it was a direct contribution in job creation. But with the tightening monetary stance, we have now rolled back those schemes and are now focused on facilitating those sectors through the banking sector. For instance, we have ensured that through our supervisory process that banks are focusing on priority lending, lending to agriculture sector, lending to micro and SME sectors. So that's a role which is a kind of facilitative role instead of direct interventions. So there are various ways through which the central banks contribute in this process. One, there are direct interventions. The second is there are more facilitative role instead of direct interventions. So we have to strike a right balance between our policy stance as well as the policy stance on focusing on the core functions as well as through the facilitative role of economic growth. So that's a very delicate balance I think we as central bankers will have to strike in order to contribute in this process, but at the same time achieving our own statutory objectives.
Thank you very much indeed, and I was very busy actually trying to map out the relationships that you are describing. And very, very interesting. And look, you'll be the last one just to make some few comments, and then we come to specific questions.
Thank you, Moderator. After hearing from our esteemed three speakers, I don't think I have anything else to add on. But let me start off by acknowledging the host of this occasion, the Central Bank of El Salvador, and of course, AFI. Thank you very much for the hospitality that has been rendered to us so far. I know this is the last day for us, and I was told that you have to end your coming here by dancing. I did mine last night, so I end my place. In terms of financial inclusion, I tend to see financial inclusion as a journey that all of us will have to go through certain stages in terms of development. We are gathered here because we are so passionate about addressing the bulk of our population who remains in the village or in the rural communities. As people coming from developing and emerging economies, I think majority of our population, they live in rural areas where financial services are not really, they don't have access to it. Otherwise, there will be no financial inclusion. So we are trying to address the financial services or bringing the financial services to our rural people or the last mile. If you look at the financial sector in general, this is relating to employment. The financial sector cannot absorb everybody or employ everybody in the financial sector. However, the financial sector can be used as a conduit or a vehicle for employment in other sectors. So when you have access to a financial services or to a financial instrument, you can be employed in another sector. So a financial sector, we should look at it as a conduit to employment in other sector. Now, financial innovation is the extension of financial inclusion, which has made it more easier or simple for the last mile to have access to financial instruments. As you know, all of us, we know that traditional financial institutions, they have reduced their fiscal branch from outside the state because it's very expensive to operate. Now, the alternative is, of course, you have to go digital, hence the need for financial innovation. And I think that's the very important thing that all of us here, that when we supply the innovation, the type of innovation that we provide for our people, it's simple, easy to access. At the same time, it protects the customer. And of course, it has to make a little bit of profit in that. So there is some social aspect into it, not so much in the profit side. I think I'll stop here. That's very general. Thank you.
Thank you. Thank you. Thank you very much. And let me now, I think you have had some general sweep in terms of where we wanted to do so that we can go into the specifics. And the specifics will allow us also to move into the next phase of this work in AFI, which we want to try and see how we can map out country-specific studies that can be more informative to policymakers. Let me start with the first question. The first question is to ask ourselves, what opportunities exist to strengthen or to further strengthen efforts to support job creation through financial innovation and stakeholder collaboration? And I don't want to go in the same order. I just want to see who wants to go first, because essentially we are saying we know that there is an existing mechanism. But at least we can actually say, in the new world where innovation is becoming a driver, are there efforts that we can map out? And I want to make sure that I use democracy here just to make sure. Democracy is very important, but of course guided democracy is very efficient. But let's see how it goes. Okay, please.
So democracy. Actually, the opportunity of seizing these innovative technologies, we're witnessing day and day changes and the emergence of new and innovative solutions. So the policymakers and regulators should seize really and embrace this opportunity because, for example, when the Industrial Revolution took place, where automation started to replace part of manual work and productivity, the productivity rate increased with like exponential rate, but not as much as what we are facing today. Because at that stage, it's only the productivity associated with technical and automation. But nowadays, we're talking about something very different, very innovative. It's the change of cultural change associated with these new technologies and innovations. So I believe for policymakers, it's a good opportunity for them to seize this innovative solutions that is leading and really causing dramatic reduction in transaction costs. Reduction in transaction costs, speed and convenience in transactions lead to a very productive economic growth in different areas. And back to the core function of banks, hoarding savings and channeling them for productive areas. So now the speed in channeling these funds, the speed in financing development, the speed in doing that, and the technology with overcoming the challenges of I need to go to sign. Today we have very secured and efficient digital signature. Using biometric to verify and validate who I am. All these technologies, I believe the policymaker should seize and to coordinate with each other. Maybe AFI is the best alliance and institution in the world that can bring this collaborative platform for everyone.
Fantastic. Fantastic. You want to go in?
So from the Central Bank of Pakistan perspective, when we look at the financial inclusion and digitalization, and we studied it as part of our strategy, which we had the two financial inclusion strategies at national level. First one was in 2015, and then second one 2018 to 2023. As part of this strategy, we had a number of initiatives taken, and one of the core issue which we realized that our population is, comprises of obviously women population. 70% of our unbanked adult population comprises of women. So we have to come out with strategy for inclusion of women in formal financial sector. And secondly, 2/3 of our population comprises of young people less than 24 years of age. So we have to, and normally they are more tech savvy, so we have to come out with ideas and solutions which can attract them to the formal financial sector. So from introduction of technology perspective, we have at least 4 initiatives, specific initiatives taken as part of our national financial inclusion strategy. First one was that we have launched, we call it a San mobile account, which is a USSD-based mobile account opening process, which is a simplified process and can be adopted by young people, particularly who are having access to mobiles. And as a result of that, we have been able to enable them to open more than 10 million accounts as part of this initiative. Secondly, we have internet-enabled account opening process, which is a digitized, end-to-end digitized account opening, and which can be done through internet-based remote banking services without visiting the formal branches of the banks. So under this process, under this initiative, we have been able to open something like more than 3 million accounts, remote accounts. And third initiative, which was very important, I think, both from the financial inclusion perspective, as well as in contribution to our remittances also, that we have, we call it Roshan Digital Account, RDA account, which was meant for the overseas Pakistanis, those Pakistanis who are working in various jurisdictions outside the country. So we allowed them digitized remote account opening process through which they can send remittances, and they can also then make investments in the stock market, in the real estate, and in government securities, government bonds. So that has been a very successful scheme for us, and we have been able to attract $8.7 billion in last 3 years through this scheme. So it has been a continued source of foreign inflows for us, as well as it has been able to connect our expats with the formal banking sector in Pakistan, so they are remotely availing various banking services through this account, and they can invest and also then can send funds to families for consumption purposes. And lastly, we have come out with a micropayment gateway, which is an instant payment gateway for us, which we launched a few years back. And as part of these gateways, we have 3 use cases. Initially, we started with the bulk payment processing through this micropayment gateway, then person to person, and ultimately person to merchants. And this has been a game changer for us in order to attract people to the formal financial services, and particularly for payment services, that they can transfer their funds instantly through the use of mobile accounts and through other means from one place to another place within the country. And so far we have 38 million IDs created, users of this facility, and it's growing exponentially particularly during last 1 year or so. It has grown exponentially, and this is a faster, secure, instant payment gateway. Our service standard is that within 16 seconds, that's the maximum time, but on average it takes 6 seconds for transfer of funds from one place to another place. Thank you.
Thank you. I think the biggest problem is that when you are talking to these operators and regulators, they can combine. Now we have answered up to the third question from the discussion that we have had. You have taken them all together because we are seeing that you can use this technology also to even target specific groups that are disadvantaged. But you have also answered the question, what are we seeing with the fintechs changing the profile of the economies in terms of changes in terms of the financial innovation, speed of service, and all that. That is very, very important. I would like, Madam, and do you have anything to add to this? Because I think our 3 questions, even the third question has been touched on, but I would like to feel free what you want to touch on. And so is Luke. Okay, please start.
Yes, just one point, and I think it's important to properly identify, for policymakers, to properly identify the key stakeholders that will be part of discussions on how technology, financial innovation expands job opportunities. Some of the challenges I see in some of the countries we're dealing with is that the education system is not progressing at a pace in which to meet the needs of the economy. So you have an economy that is growing in the direction of innovation, technology, artificial intelligence, and all these kind of processes, but you still have an antiquated education system that is churning out graduates that are not fit for the marketplace. So I will say that stakeholders, be they the government, the central banks, should be part of the discussion on how to improve the skill complement, right from maybe from the university level, but even off the universities in the marketplace, skills acquisition, and those kind of things that will then spur the demand for those particular kind of jobs, and then will increase the employment of the economy. Thank you.
Okay.
Just quickly, just to pick up from the previous speaker, in terms of the, I think one thing that I've seen from our experience is that if you look around in the room, financial inclusion is driven by mostly central bankers. In my experience, we found that the government, since we are championing financial inclusion, the government is very slow to join in. So some of the issues that needs to be dealt with the government, sometimes they are reluctant to come on board. One specific example in our case is financial education. We are trying to put in the financial education into the school curriculum. We've been trying our best to get the Ministry of Education to come on board. We have done so many meetings with them, and there's too many changes in human resources. So these ongoing challenges is one of the things, and I think it's better to have them on board right at the beginning. In saying that, we do also have very good collaboration with some departments in the Ministry of the government, like the Ministry of Commerce. We have a rep from the Commerce here. But the opportunities are there for strengthening financial innovation. In terms of PPP, which is, I think this is a very, very good collaboration between the government, the private sector, the financial institutions, and of course the international partners. Like in our case, we have this mobile money, which is set up with all the collaboration stakeholders, and it was very successful. Thank you.
Thank you.
I would like to add to what Dr. Iyabo mentioned about with whom you need to collaborate as well. As we noticed recently with more of innovation, especially in the financial sector, many of new jobs were created that are based on working remotely or a freelancer on contractual basis. I believe still here central banks should go into more of collaborative work with Ministry of Labor, with the agencies, federal agencies associated with protecting labor's rights in these types of new jobs created from this, and even with pension funds for those jobs that are threatened for the benefit of creation of new jobs. I think at a nationwide, not only with the educational and academic institutions, for those who are about to exit the market. So I think there should be something at a larger scale as well.
Thank you very much. And you keep coming and introducing new components, because I think when we talk about financial inclusion, we're also talking about a whole family of regulators, from pension, insurance, all those, everyone. It's very, very important that we bear in mind that we are really looking at a whole family of regulators. But now, having even shown what has happened with the innovation and the whole spectrum of technology driving the whole process, then we have come to a new emerging evidence showing that what will happen with artificial intelligence, machine learning, is there a risk of losing it in terms of job creation? This is specifically theory on job creation. This is a short one, so we can ask ourselves, maybe we can, whoever wants to go first, you can dwell on this, because it's a signaling issue that is coming up that we may lose on job creation. You want to go first?
Okay, all people are claiming that artificial intelligence is really threatening most of the jobs as of today. But this brings me, maybe not, I'm not sure. But it brings my memory back to when my father used to work as a CFO. At that time, financial manager, not even the terminology of CFO. When the computer was launched, my father and his colleagues felt threat. We will lose our jobs. The computer will be doing our job. It will bring it from manually putting the entries and the ledger, everything into more of digitalized or automation. But it didn't. New jobs were created. Now, even with the artificial intelligence, we're witnessing the emergence of data governance, data analysts, smart data, business intelligence, data protection, legal firms. So with everything, there is always a new, but this is like the conventional role of these jobs are changing. It's not like replacing, it's embracing and creating new skills and new jobs. It's not, I don't think it will, it threatens some jobs, but it will create others.
Thank you. I don't want to say like a speaker in parliament saying whether those in the same opinion say, anyway, now, do you have anyone with a contrary opinion? Because I think the point you are making is that we are really looking at efficiency. We should not be looking at job losses, but efficiency in terms of that. And then, of course, the multiplication of such machine learning is actually more production and even better services will emerge. I think that's the point you are making. I don't know whether you talked about some of this in your statement, especially in your second answer. Anyway, let me hear from you.
I just wanted to add that obviously artificial intelligence is important and it's a revolutionary step and will be contributing tremendously in the change of the nature of job market over a period of time. But I think at the same time we should also keep in mind that there is no substitute of human intervention, and there will be number of areas where human intervention will be required. So ultimately the nature of jobs will change, but it will not be a kind of disruption to the job market, and there will be many new opportunities as a result of artificial intelligence, which will in fact will lead to the expansion of the job market. And the second point I just wanted to make is that there is issue of fairness and ethical ethics of the job market, and somebody will have to be there to ensure that there is a fair treatment to the various players, and also the ethical standards are being maintained. So from that perspective also, and these issues cannot be left to the artificial intelligence. There has to be some human oversight in this process to ensure that there is a fair treatment to everybody and all stakeholders are equally contributing, and also there are ethical standards which are being followed. So from that perspective, I think we should not be afraid of artificial intelligence. It will facilitate us in discharging our responsibilities, and in fact will be creating many new opportunities to explore. And this is what we have seen in recent periods also, when there are different jobs which are being created, and as a result of that, the tech-savvy young generation, they are able to tap those opportunities.
Thank you very much. It is actually related to the point that, for example, when the mobile phone started, some of the retail banks thought that they will lose customers because they will use their phone as the bank accounts. But they realize that actually, when they are connected to that system, they were actually earning regia fees even at midnight, because essentially the phones was helping them remove the queues in tellers. That's one of the issues. I think there's a point you mentioned, and this comes to the next question. When central bankers and regulators of the financial system are dealing with these issues, other ministries, other organizations are not even concerned. They don't even know what is happening. They end up seeing results, and then they join in. And that is the next question is, what do you think will be the best strategies for trying to bring ministries? I remember when we started M-Pesa in Kenya, as central bank itself, nobody else wanted to understand what is happening, except the communication authority, because it was a regulator for telcos. And in the end, when it worked, everybody was part of the game. But I think we now have learned that lesson, and we need to ask ourselves, do we come up with different strategies in terms of how to involve everyone from the word go? And this is the kind of point that you've mentioned. We do not need to struggle alone. We want everybody else to be in a collaborative, we create a collaborative strategy so that everyone understands what is coming, where we are going, not create the room for so much democracy which can spoil the development. But the most important thing is we get understood. Do you think that there are strategies that we can come in to try and improve on the collaboration, especially across ministries and across organizations in our own respective countries? Maybe there could be some deficiencies here. Who wants to go? Okay, please.
Yeah, I think I mentioned right from the start, we need to include the relevant stakeholders who are supposed to be in the conversation. So, like I mentioned, the government ministries, like the Ministry of Commerce, Ministry of Finance and Economic Planning and Education, they need to be, right from day one, they need to be involved. Otherwise, down the track, this is what we've been experiencing. It's very hard to get them on board when we are already halfway through the system. So I think the best in our situation is we've learned our mistake, and we are starting to, the collaboration start from the new initiatives that we are coming up. We make sure that we have to include those relevant ministries in place. For example, like the Ministry of Commerce, we are planning to do something on financial innovation hub and incubators, and we have started the conversation around that on how to come up with that kind of thing, and the Director of Commerce is very receptive to the idea, so we are going to explore those options. Thank you.
Anybody else who want to go into this? Okay, Madam.
Yes, what I will add to that is that such a consultative process should be as comprehensive as possible. Clearly, it will be led by the government, because the central bank is quasi-government and other agencies involved in rolling out the policies of the country. But I see a lot of room for the involvement of the private sector, the chambers of commerce, the trade associations like the technology associations and all that, in such standard setting, so that the information that comes into the process is as comprehensive as possible. Thank you.
You want to go into this, or we come to the, okay.
Yeah,
Okay.
I just wanted to say that central bankers are predominantly focused on the supply side issues, whereby they are coming out with various innovative solutions for improving access to financial services, and also coordinating with the regulated entities to ensure that those services are being made accessible to the general population. But to me, the demand side issues are also equally important. For instance, in the case of access to finance for women, I mean, sometimes there is a lack of collateral, legal right issues are there, documentation issues are there, awareness issues are there, and in our case, for instance, there are cultural issues also, that women are not very mobile. So we will have to ensure from central bank's perspective that we are coordinating with other stakeholders also, because some of these issues may not be directly under our domain, so we have to coordinate with other stakeholders, particularly concerned ministries and some other private sector organizations, in order to provide redressal for those issues. And there, I think the role of coordination and collaboration with concerned departments is important.
Thank you very much. At the very end, we still have to come back to the main issues, because we would like to make sure that AFI management unit support for AFI members have a way of trying to distill the discussions that we have had here, to try and create initiatives or try to advise those respective countries about the initiatives to promote job creation. Would like to maybe to perhaps even individual members here will ask specific questions. But I would like you to maybe answer that question, saying, how can we encourage AFI management itself to come up with, should I say, a unit support, a support unit for countries in terms of how they can actually enhance the role of job creation? And this could be in ways of creating, for example, dashboards, peer exchanges, peer running processes, impact measurements, and even try to uncover the channels through which job creation and the structure of the markets that we are dealing with, and job creation and how it takes place. It's a whole summary of issues that we have covered with, but I would like some pointers, because I'm sure that is the kind of questions that may be asked, and we have to be ready for them. Who would like to go first?
This is a very challenging question, Doctor, I have to admit, and I will try to improvise to come out with an idea or recommendation. Not necessarily to create something like a unit specifically for the topic of central banks and job creation. I believe it's one of the consequences of strong and robust and comprehensive policies for financial inclusion, because we know that one of the consequences of financial inclusion is job creation and poverty alleviation, correct? So it could be part of that. However, the AFI could go into proof of concept, for example, with 2 volunteering central banks to conduct like an experiment. Could be digital, educational, vocational experiment. Selecting a country, for example, Pakistan, central bank with the specific universities, specific private sector stakeholders, other ministries of education, etc., to work on a model how central banks can impact job creation or bridge the gap between the educational outcomes of academic institutions and what the financial sector in terms of digital financial services, what they require. That could be one experiment in a country, another experiment in another country with some tweaks and changes. I like to do it like more of implementation before putting policies. Let's, before embracing a policy and start to promote for other central banks, let's test it in 2-3 markets with the collaboration of central banks and their stakeholders. If we can do that, then AFI could be the right platform to disseminate this new knowledge and this new policy.
I'm not sure if central banks can create employment alone. I think employment is a countrywide responsibility, especially the fiscal side, of course, plus monetary. I was thinking AFI can be used as an information center, whereby, because AFI knows all the member countries, they can source information from each member country on how that particular country came up by creating jobs, then another member country can access those information as a way maybe to design policies for employment. Thank you.
So, on the organization structure, I think I will leave it to the AFI management to decide if it has to be a separate unit or within the existing structure. But I would like to highlight 3-4 areas where I think the AFI can play a role in this regard. First of all, there are many good learning opportunities in certain countries, case studies of specific cases. And I think here the AFI can play a role of launching, for instance, the exchange programs, whereby one member country can learn from the good practices in other countries. And secondly, I think there are certain fintechs which are in relatively risky areas and which require at an initial stage some kind of hand-holding. So if they can come out with certain grant programs or some other facilitative measures whereby they can handhold the specific fintechs which have the potential to succeed. So that's another area I think where they can play a role. Then thirdly, overall assessing the overall effectiveness of financial inclusion in respect to member countries. I think right now there is no yardstick on which the success of individual countries can be measured. So if AFI can come out with some kind of financial inclusion index program, for instance, or similar other tools which can be used to assess the level of financial inclusion in a particular country, so that it can then be compared across the countries and see which countries are leading, and then others can learn from those experiences. Because right now it's more, I will say, judgmental call instead of having quantitative, empirical based evidence for the growth of financial inclusion in respect to countries. And lastly, I think there is already they are doing much on the capacity building, but there is some further need for strengthening the process of extending capacity building support to the individual countries, because there are certain areas where countries can learn from each other, and at the same time AFI can bring the latest good practices in those areas which can be beneficial for the member countries. Thank you.
So quickly, I think I agree with most of the points that have been raised. I think the way in which AFI is structured and the way in which it impacts most on its member countries is through this kind of gathering, through experience sharing, through seminars and advocacy. And I think those are the ways in which it can make a meaningful difference on this issue. Being able to gather evidence on how countries' financial inclusion policies, how it's impacting on employment, and then disseminating it to other members so that those would want to know where the success points are, can have that information and then be able to implement it in their own countries. I think that's not much different from the way in which a lot of the work of AFI is structured, and I think that will help on that issue. Thank you.
Thank you very much. And I think the point you're making also is that some specific targeted case studies can be more informative, so that we can generalize from the case study that is more case studies, and we can make a comprehensive structure in terms of what we can do. That's my gathering. And of course, we know for sure that we need to map out, when financial growth is taking place, what are the sectors, what is the influence to other sectors. I think that is a very, very critical area. I'm watching the time here, and I can see that virtually, I think the most important thing is also to let the rest of the audience actually ask specific questions, or even provide specific targeted questions, or even some, should I say, some statements or facts in terms of their experiences. We can allow a few questions, please. I think that is in order. And then I'll come back and maybe make some short summary in terms of what I think we've done. Okay, thank you. Let's start there. Can I see? I hope I can see everyone.
Excellent conversation. I enjoyed it. I want to pick on a few things that the Honorable Governor of Pakistan mentioned, and to say that in my view, if I were just to summarize, I'm thinking the role of central bank, I agree with most of the speakers, the role of central bank is not really to directly intervene and be creating employment. However, it is our duty to create the enabling environment for such employment to be created by the private sector. And I'll come to a bit of detail. You need four things for a financial system to develop. And this is access to finance, financial equity, efficiency in the financial system, and then activities in the capital markets. So the enabling environment creation is such that through your regulatory policy, you ought to be able to encourage. For instance, my governor about 2 years ago took a bold decision to say we must license fintechs, whether or not you have a proper regulatory system, but they must be licensed. And it happened. And we realized that a number of the NGOs that are operating now, some of them with a local presence, are actually contributing significantly to employment creation. So the central bank, in addition to creating the enabling environment, has to also promote market development drivers. Yesterday we heard the governor from Mozambique mention the issue of whether or not you need to take prescription sometimes, you need to take coercion. The developing or market development drivers include the fact that you need to help roll out technology, technological development in the market. You need to help build the system in such a way that the point I'm making is as the financial system grows or develops, you are helping indirectly to create employment out there. So just in short, market development drivers and creating an enabling environment for the financial system to grow. So thank you very much. Excellent speakers.
Thank you very much for that. Any other question? Yes, there. Okay, you have the mic. Thank you.
Thank you very much. My name is Masha. I'm from the state of Pakistan. On this very point of job creation, I just wanted to highlight two things. One, when we talk of financial inclusion, actually we are talking about self-employment or promoting businesses from scratch. And then the real success would be to help the micro businesses to come small to medium and medium to large. That the job creation, in my view, is directly associated with the migration process, from one class to another class. The second thing that is really important is when we talk about financial inclusion, it's not merely, the account opening, as we've been talking a lot, in this event, but the offering of the financial services, which includes credit as well. So when, as suggested by the governor, it's important to have, when financial index, the usage of financial services should be a high priority, especially the credit, which should extend to these marginalized sectors. Thank you.
Thank you very much. Any other question? Okay. Deputy Governor from Eswatini. Or somebody else. Okay. Please go. Then you come to.
Hi, Natali Sanchez from Superintendency of Banks of the Millennium Republic. As I hear all you speak, I am truly amazed about the journey that you have underwent for digitalization and payments and the innovation implementation. And what I wanted to know, any advice, especially to Jordan and Jopak, how to change the mindset from the traditional banking to a digital platform how do you boost the innovation if the culture does not want to foster it, or it's maybe not digital native, so they have that barrier to access financial, and that may be excluding some part of the population. And thank you.
Thank you, Natalia. JOPAC is an executive arm for the Central Bank of Jordan, so we don't set policies. We collaborate with the Central Bank, and actually we try to implement and deploy the policy objectives of Central Bank of Jordan. Accordingly, we have two streams how to get people into the more of digitalization. From the supply side, like the financial sector, to embrace, it's like we promote the idea. We show them how it really solves their problem, and how it, for example, enhances efficiency and effectiveness from the financial sector side. If they don't cope with us, it's the central bank that enters and mandates wherever the central bank deems necessary. On the other hand, with people themselves, we do it using different approaches. One of them, as I mentioned, digital experiments. We have our interventions in the market. We do interventions, whether in the universities, with the schools, different types of interventions. Could be knowledge products and services, could be changing part of the digital solutions that copes with youth, or with women, or with this specific sector, or with this specific geographical area. And based on the results, we disseminate this knowledge. We do partnerships with other institutions to incentivize people, merchants, to incentivize digital usage. We have different approaches, Natalia. You can do whatever you deem necessary, and that fits your culture and your approach. What really is important, the cultural changes. Digital transformation and fintech brings cultural changes, and ultimately it really translates into more of policy objectives. So usage of digital transactions, for example, click and instant payments, it came like as a result of the convenience, cheap, easy usage on the cost of using cash or paper checks. Okay, so you have to apply different approaches depending on what is your intervention, what is the digital solution, and with whom you are talking. But before making it at the country level, we experiment different segments, different geographical location, etc., until we see which one will have better impact on everyone.
Thank you. Let's have a final question from her, and then we can come back to the panel. Yes, please.
Thank you, panelists. The discussion has been vibrant and thought-provoking. I just want to go back to the policy, especially when we talk about monetary policy vis-a-vis job creation. Let's assume we were conscious that if we intervened and tightened policy, we might affect jobs. What would be our choice? Allowing the inflation to perpetuate, allow the exchange rate to depreciate, what would that do to employment? Because I don't think we just do whatever we do for the fun of it as central bankers. There's a policy reasoning behind it. If we let everything go and assumed we are preserving jobs, would we be preserving those jobs? Thank you.
Thank you very much. I don't know whether you'd like to answer, because we are running a bit short of time. I wanted to summarize at the very end. But anyone with a quick comment on all the issues raised? Please.
I just wanted to comment on this last question. I think we will have to keep in mind that there will be, obviously this is a difficult choice. And we have to keep in mind that do we want to have short-term benefits of continuity of the jobs and then ultimately landing into a bigger trouble, or we want to pay short-term cost for the sake of long-term gains in the long-term future. So that's a kind of choice which the policymakers have to make. And I can say, based on my own experience for the last couple of years, since we were facing serious problems a couple of years back, and we will have to take many tough decisions. And if I look back and will say that if we had not taken those tough decisions, and as a result of those decisions, there were some job losses at that point in time. But now, just in 2 years, we have been able to bring, for instance, inflation from 38% to less than 10%, which is a single-digit inflation in less than 2 years. And similarly, our account is 4.7, current account balance, which was 4.7% in deficit. It was a 17.5 billion current account deficit in fiscal year 2022, and we have been able to bring it to close to surplus, I will say now. Last year, it was only 700 million as compared to 17.5 billion 2 years back. And it was the result of the most difficult policy decisions which we have taken. And obviously, those were very painful decisions. And as a result of that, there were some job losses also. But now, since we are back on track, and I can foresee that now the economy will be growing. Current year also it will be a good growth around 3.5%, and coming years it will be further expanding. And as a result of that, we will be able to recoup those job losses. But if we had continued with those easier policy decisions, then ultimately we would have landed into a bigger trouble. So it's a choice for the policymakers, I would say.
Thank you. Let me summarize, because I think I can see that time is running. And I do agree. And let me come back to the last question that was raised about interventions by the central bank. All interventions and actions by the regulators work through the markets. That should be understood. And if the markets are working, then it means that you're going to get the appropriate results. Okay? Whether you want to contain inflation, the markets must work for you to get the appropriate results. If you don't get the appropriate results, it means the markets are not working. AFI was started with primary regulators in an effort to increase or to raise the level of financial inclusion. The expectation was that that would give us financial vibrancy in the financial market. That's financial growth. And in the process, we'll get financial development. And most of us can actually map that. And it started by your first question saying that, what is the role of the financial system? Create savings. Why savings? Two-dimensional savings. Because investments is one critical, important thing. But the other one, in very, very important societies that we live in, it allows savers to actually escape cycles of poverty, which for us is very, very important. And I do believe that that is a very, very important aspect of that. Sorry, I have to talk about, like an economist, in structuralist theory, they actually, especially people like Justin Lin, they argue that savings are the most important thing, and capital accumulation is very, very critical. Why development and even, should I say, why economies are not developing at the rate we want is because their capital accumulation do not reach the thresholds required. And that is quite critical. That is why we continue having these problems and structural problems that are coming up. The third point I want to make is that if markets are functioning, then it means that jobs will be created. And it is for us to go back and say, why are markets not functioning? Where can we fix the markets? And I'm very happy that we can come back to a point where we can even have some specific case studies. I'm happy because most of us think structural, so we can even come up with structural relationships, and we try to test them. But at the end of the day, because we are dealing with financial markets and something this Deputy Governor from Eswatini has mentioned, something that is ignited my thinking, we still also have hiccups in the market. Let me give you 4 points that we should also watch so that when things don't work the way you anticipate, then you do not, something goes wrong. First, monetary policy actions to fight inflation. It all depends on where inflation is coming from. If inflation hitting you is from the supply side, then there's nothing you can do. Just bring back the supply and inflation will be contained. But because you cannot bring back the supply, what do you need to do? Most of the time, we restrict or we contain or we have tight monetary policy, which plunges the economy into a short-term recession, which is consistent with job losses, isn't it? But we do that because we only have demand side instruments. We have not even developed supply side instruments. We do believe that once the supply comes back to the market, we will have removed the plateau of high prices. That's one thing. The second thing is because exchange rate was mentioned. Most of the time, exchange rate is a very interesting component. And one of them is it defines the relative price, the nationwide relative price. So in a sense, and especially where we come, in the region I come from in Africa, every politician wants a very strong currency. And you know what it means. And so when your relationships don't work, it means that when you you want a very strong currency and you do not allow the nominal exchange rate to be the automatic stabilizer, then obviously the adjustment processes is devoid. Again, you may find some hiccups. And we do feel that the side of the world that we come from, especially East and Southern Africa, what we have seen is also the whole idea that was mentioned by the team here. Credit supply is the grease that is supplied to the wheels of the economy. The moment you do not price credit appropriately, then it means that the whole avenue of job creation is cut, isn't it? Credit is very, very important. And one of the things that we really look at when we talk about the crowding out story, that is the government is borrowing more than the private sector, so it is driving the interest rates. The central bank there is waiting to use the same instrument to influence economic activities. Then you find yourself, these are what I call the hiccups. So in a sense, remember that I promised that I should not talk like an economist, but I have already talked like an economist. An economist is a person who, when he sees something working in practice, he asks whether it works in theory. That is where I am now. Finally, we have seen financial crisis. What happens to financial crisis? What is the impact of financial crisis? I wanted just to bring those because at the end of the day, we would like to help the AFI management unit to map out and even come up with clear case studies. And you can see the devastating consequences of any crisis, any financial crisis. It's very, very important because then it is destroyed. And finally, jobs are created in the marketplace. So we have to see what are the links between the financial system to the markets, to the specific markets. Once those markets are working, they are going to create jobs. And they are going to create jobs, and there's endogenous growth in this. It's something that we can move on. But I'm very happy with the panel that they have tried to answer as many questions as possible. I'm very happy with the audience that actually you are even asking for more. I think the work goes back to the Secretariat of AFI to see how do we map out, maybe in small case studies that can bring out all these relationships. They are diverse, they are structural in some cases, and others are just sporadic. But we also have to understand that that relationship can be mapped out, and obviously in functioning markets, we can actually come up with a structural way of detailing that. I want to thank my panel for the questions. I think they could have talked more and more, and because they have been exposed many years of work in this area. And I'm very happy that we were able to at least even one small step inside this subject matter, and we know we have some starting point. Thank you very much.
Ladies and gentlemen, let us thank again the panel members and the moderator, Professor Ndung'u, for their active participation during the session. Thank you very much. We have 30 minutes before the official closing ceremony of the 2024 GPF. If I can draw your attention to the screens, we will now conduct the Global Policy Forum evaluation. We kindly request you to share your thoughts and feedback about this Global Policy Forum. Ceremony of the 2024 GPF. I would like to call Dr. Eliki Boletagua, Director of Policy Programs and Implementation of AFI. Welcome.
Buenos tardes. Okay, I didn't hear that. I know we're coming towards the end of the day. We still should have some more energy. Buenos tardes. Wonderful. And I think it's only right that we give a big round of applause to our mistress of ceremony, Maria, who's done a great job so far. Esteemed ladies and gentlemen, it has been truly a remarkable week here in San Salvador, El Salvador. As we wrap up the 2024 Global Policy Forum, it's important to remember that all good things must come to an end. Our time together has been incredibly rewarding, filled with inspiring discussions, innovative ideas, and meaningful connections, and the amazing celebrations that we've had in the last 3 nights, which was quite eventful around the dinners. Again, a round of applause to our co-hosts. Though our sessions have concluded, the impact of our collective efforts on financial inclusion will continue to resonate. Let us cherish the insights we've gained and the collaborations that we've fostered. These moments of learning and exchange are a stepping stones toward advancing our goals for financial inclusion. While this 2024 Global Policy Forum may be ending, the journey of progress and partnership is ongoing. Please note that the Presidente would be delivering his speech in Spanish, and I will request that at this juncture, you have your translation kits on standby. But before we invite President Rodriguez, let's take some time to reflect and watch this video that captures some of the amazing moments over the last few days. Esteemed ladies and gentlemen, to deliver his closing remarks, please let's welcome Licenciado Douglas Rodriguez, the President of Banco Central de El Reserva de El Salvador. Vicepresidenta del Banco Central de Reserva, señora Hazel González, estimado amigo y secretario de Comercio e Inversiones, señor Miguel Quitán, estimado embajador de El Salvador para África, Ignacio de Cosio, estimado gobernador del Banco Central de Reserva de Fiji y representante de la Junta de Directores de AFI, Arif Ali, estimado director ejecutivo de la Alianza para la Inclusión Financiera, Dr. Alfred Henning, estimados miembros de la Junta Directiva de AFI, queridos amigos, miembros de AFI, invitados especiales, muy buenas tardes para todos. Hemos llegado al final de esta semana, que ha sido una gran semana.
Which has been a really great week.
Muy contentos, estamos
You seem very glad and you seem very happy that we are actually very happy that you have been with us and that you have managed to wrap up this wonderful week. The culmination of this Global Forum on Financial Policies 2024, which is incredibly important at a global level on this issue. This week, we have managed to share experiences, great practices. We have had incredibly meaningful discussions on the leadership, inclusion, and financial education, innovation, global standards, digital financial services, green finances, inclusive green finances, and taking care of gender, as well as, as the Central Bank of El Salvador, we have managed, and you have allowed us to share with each and every one of you our most specific actions, the projects that we have implemented so as not to just remain on public policy, but also bringing into action what our President Bukele mandates, and also the agreements and the commitment that we share with the Alliance for Financial Inclusion. We have stepped out of the box as a Central Reserve Bank. We are not a traditional Central Reserve Bank in the traditional sense, who only focus on issuing monetary policy. We have focused and we have really worked hard to improve our services and the products we offer and to create products that will benefit directly each and every Salvadoran. We can name a few. For example, Transfers 365, in all of its modalities, which is national, the international that connects the Salvadoran and Central American and Dominican Republic region, mobile and business, and also why not mention one of our largest projects that we've launched as the Central Reserve Bank for our population, specifically for our young people, our My Financial Journey bus, which I don't know if all of you got to see it, but it's in the parking lot next to the lobby. So in this bus, we will ensure to bring, and we are already doing this, financial education to every single area of our beloved El Salvador. There isn't a single area where we will not be able to reach with this bus and start teaching our young people that they are getting ready to go out into the labor market, that they have nothing to fear to the financial services and products being offered by our financial system. We are indeed closing the gap of financial education from even before our young people go into the labor market. Having said that, we were also able to share our progress as far as regulation and approval of our roadmaps for green finance and inclusion for women. Also, we were able to publish a document on this case study for immediate payments for El Salvador called Transfer 365 as a contribution for all AFI members that shows our commitment to helping and benefiting all Salvadorans through financial innovation. Also very important, we approved the San Salvador Consensus on responsible financial innovation, which consolidates the commitments that we assume that all members of AFI have assumed to continue to move forward with specific actions to promote in each of our countries financial innovation, which is one of our contributions as part of a co-host nation. We are very proud to be the first Central American country in hosting an event of this nature. It is very satisfactory for us to know that after almost a decade, we had the opportunity, and an opportunity was given to a Central American and Caribbean country to be a co-host, 10 years. And as we have shown our commitment to the Alliance for Financial Inclusion, it hasn't been easy to host this event, to hold this event, you all know. For those of you who have had a GPF at home, those of you who have been co-hosts know that this is hard work. It is a large amount of work. I can see Egypt governors understanding of what I'm saying. And since we were notified in Manila, Philippines, last year, I guarantee that we have had a very large, very committed team of a Central Reserve Bank. You know, us too, and I like to ask my co-chair. She's been incredible. She's been amazing. You know, of everything that you've seen this day. Thank you, co-chair, for coming to the scenario with me.
Gracias, vicepresidenta, por esa enorme contribución.
Thank you so much for that incredible contribution.
Y sí,
and yes, to co-host this wonderful event, we have worked tirelessly. No time, compassion, but most of all with heart. Exactly a year ago, we started getting ready. We got ready for every single detail that you've experienced here, that you were able to appreciate and see and experience in this event, so that you may feel that it was well worth it. That all these, flights, 24-hour flights, these long flights, and the days that it took you to get here, with, transferring through airports and endless things, that it was worth it, right? It really was worth it. I think it was. But also, that isn't just, a work of us two. We would be lying if we could say that this is a job that we did, or that we did in ourselves. No, behind us we stand, and I want to call up here an amazing team and the almost 300 Central Bank Reserve employees that are going to come up here into the scenario, because I really want you to see each and every one of them, all the wonderful work they've done.
es un lienzo lleno de color y fe. En cada rincón se escucha el cantar de pueblos que sueñan, con manos unidas y un solo latir. En un solo ritmo y corazón siente la emoción de nuestra pasión. Baila con el alma al calor de esta canción que canto con amor. Bienvenidos a El Salvador, tierra de esperanza y fe, donde el verde de los campos es un canto natural. De las playas hasta el volcán, su belleza es sin igual, coloridos cafetales llenos de historia y valor. En cada rincón, un cálido abrazo y sonrisas encuentras, con manos unidas y un solo latir. En un solo ritmo y corazón siente la emoción de nuestra pasión. Baila con el alma al calor de esta canción que canto con amor. Somos uno, sin fronteras. Un, dos, tres y en un solo ritmo y corazón siente la emoción de nuestra pasión. Baila con el alma al calor de esta canción que canto con amor. En un solo ritmo y corazón siente la emoción de nuestra pasión. Baila con el alma al calor de esta canción que canto con amor.
Por este exitoso evento. Gracias por darlo todo, por el Banco Central de Reserva, por la Alianza Financiera y por El Salvador. Gracias equipo de Banco Central de Reserva por su compromiso, dedicación, profesionalismo y trabajo en equipo, ya que fueron fundamentales para conseguir el éxito de este evento. Muchas gracias.
Thank you so very much.
A GPF unforgettable. On our behalf, we are very proud and very grateful because we have fulfilled in our beloved El Salvador this event, being the smallest country of the Latin American region that has had such a transformative process process, and we have become an international referent for the steps our country has given in such a short period of time. Those structural changes are thanks to one person that has a love towards its people, towards Salvadoran, and Salvadorans have approved of him with 90% of approval. We are talking about the President of the Republic, Mr. Nayib Bukele, who is a worldwide referent on innovation, public policies, and who has changed our beloved country with many decisions that have taken courage in order to face gangs and battle crime that harmed our Salvadoran people for so many years. He will also undertaken very important changes in matters of tourism, security, education, and this has positioned El Salvador as one of the safest countries for investors. So now we feel very proud of having a leader, our chief in the Central Reserve Bank, the Excellency President of the Republic of El Salvador, Mr. Nayib Bukele. All of these achievements that you were able to notice in our country and appreciate of the country are the result of a clear vision and a firm commitment for the well-being of all Salvadorans. We have shown that it is possible to transform a country despite of the difficult times that all nations are going through, and that financial inclusion is a pillar that is fundamental to improve the quality of life of all Salvadorans and to reach the sustainable development we all wish for. Let's continue as members of the Alliance for Financial Inclusion, AFI, to work together. Let's keep on working together to become agents of change in the different areas of our country and keep on promoting financial inclusions to build a more inclusive and sustainable world where all the populations, meaning the inhabitants of each country, can have the opportunity for development and to achieve their goals. And from the bottom of my heart, and I'm saying this on behalf of all Salvadorans, and especially on the name and on behalf of the Central Reserve Bank of El Salvador, we really hope you had enjoyed your stay in El Salvador and that you had get to know firsthand the warmth of our people. Remember, the doors of our country will be always remain open for all of you. El Salvador is your home, and we invite you to come back whenever you want. You will be received exactly as today. So again, thank you so much, and we wish you a safe trip back home. Thank you.
Forum. Ladies and gentlemen, at this time, please a round of applause for our AFI Executive Director, Dr. Alfred Hennig, for his closing remarks.
Wow, dear friends, what do you think? You know, when I listen to you, don't get afraid, my team at least shouldn't get afraid. But when I listen to you, I think we maybe should think about an award for the host in future. Well, thank you very much, Douglas. I have a closing remark, closing speech here as well. And I want to start with something which normally comes at the end. As you know, traditionally at AFI, during the closing ceremony, we reveal the host for the following year's Global Policy Forum. So the members are already in the picture, the partners perhaps not yet. As you all know, AFI is an organization that isn't afraid of breaking a tradition, at least temporarily when it is needed. And in the spirit of full transparency, we wanted to share that today we are not yet in the position to announce the host city for the 2025 GPF. Rest assured that we'll be able to share this information with you very soon. There are a couple of fine-tuning adjustments, and as you can see from the presentation here just given, how much work it is, the next host obviously is still just finalizing a few organizational and administrative issues. That's why, I don't know, should we leave the gong with you for a while and then take it later, or we take it with us? We will see, We will see. But, we talk about it. Okay, good. Anyway, thank you very much. Now, let me maybe start by just sharing with you a few takeaways from this GPF, just for your memory, just for the record. We saw the San Salvador consensus. We saw the financial inclusion policy model for gender inclusive finance. And we also saw the launch of the AFI Engage program. I think these were three very, very important, significant deliverables at this GPF. We are happy to deliver. But apart from that, of course, we also had a couple of very important policy messages and takeaways, which I think it would be too long to summarize all of them, but I would just like maybe to focus on three of them. So one is really that we have seen that central banks are indeed taking increasingly a leading role in driving the transformation or the transformative, I should say, the transformative innovation in areas such as interoperability. We saw the 24/7 real-time payment systems here in El Salvador, Transfer 65. We heard about Cambodia, Bangkok. And in doing so, we have also seen that those of you who are really pioneering these innovations are really focused on a consumer-centric approach, which builds and preserves on the assumption that trust is key, as recognized here throughout this week in the Salvador conference. The second point is we also do see a stronger consensus than ever before, that financial inclusion does not compromise, but in fact both strengthens financial integrity and financial stability. And we have heard from the FATF presidency yesterday that also FATF is increasingly recognizing this complementarity, but we also have seen the results, the initial results from the research initiative that were presented yesterday. And the third one, I think we are also seeing appetite from members to move into new areas such as affordable housing and employment, not as extensions of their mandate, but within their existing mandates, to promote inclusivity, to promote inclusive growth through financial sector development and financial inclusion. And I also wanted to thank the last panel today, because we didn't have much time to reflect. Ndung'u, thanks for working on some of the very concrete proposals that we can take forward in this respect. Now, let me just go through all the other things that have happened. We had quite a number of events here going on, side events with our AFI partners. We had working group events, we had the regional initiatives, and as I said, we also had the launch of the GIF, the Gender Inclusive Finance Policy Model, which, as we all could see, received unanimous support from all of you. This is really great, and I think the GPF can be very proud that we have managed to bring these deliverables and all these results along. Now, just to give you a few numbers, these numbers might be found later also on the website, but I just wanted to share with you. We had in total 793 participants. 793? Yeah, that's quite a number. Okay. Yes, and it looks as if, I don't know whether this has to do with the gender inclusive finance policy model, but out of the 793, we had 406 women and 387 men. Oh no, sorry, you see? I turned the numbers, but it's almost the same. 387 female in total and 406 male. So it is actually almost equal, which is, I think, a difference from previous forums. Yeah, then the numbers can be broken down. I'm not going to do that. But what I wanted to mention is that we had 65 member countries here and 74 member institutions. So this is also a very, very good number, also compared to other years. Now, coming to the acknowledgements. Well, you see, Douglas and Hazel, I mean, your presentation speaks for itself, but I think you made one important point on the environment here, yeah? And I think it is fair to acknowledge the achievements of this country, and of course also obviously, I think we all can see that the unanimous support of the government of President Bukele, the government of El Salvador, and I also would like to thank in this context Senor Catan, who is also here with us again. So thank you very much, government El Salvador, for all what you have been doing for us. Yeah, having said this, I mean, I would like to thank everybody in the room, the members, the partners, the funders who have come here, and I think Douglas has already mentioned, yes, valió la pena, no? It was worth the effort, no? And I think all the travel that you took, it was worth it. So thank you very much for this, to the members, to the partners, and the funders. Well, I would like to thank our co-host. So spearheaded by Douglas and Hazel, President and Vice President, but we also have seen the team. But I think it is important for us that we also acknowledge the core team members of the BCR by name. So I would like to thank on behalf of AFI, Josué Ortiz, Elvia Echeverria, Isaac Portillo, Mónica Cabrera, Gabriela Centigo, Ana Mejía, Daniela Garcia, Eric Guzman, Guadalupe Escobar, Magdalena Hernandez, and Carlos Ostorga. So this is your core team. And you know, when I talk about the BCR team and all the support that we got, I think you have said, hemos trabajado con corazón, no? You have said, no? Con corazón. And you also have said, es un trabajo enorme, un trabajo inmenso. Well, you know, well, I mean, obviously in Germany we don't win World Cups and European Championships at the moment, but we still have very good teams. And one of the recipes, you know, for our teams is actually when we come from the pitch, then oftentimes you hear this comment, maybe in the news, they have left their heart on the pitch. I think you guys have left your heart on the pitch. Thank you for that. And it is not only this enormous effort, I wanted to tell you, it's also, and you say that actually also, you make my life quite difficult up here because you say that all. Yesterday night when I came, it is really also your attention to detail. Everything, everything, It's fantastic, I mean, even the smallest flower there, it's fantastic. Thank you for that, no? And we do see that as an appreciation for this community. We know that there's a lot of sympathy, and as I said, you have left your heart on the pitch, so thank you very much for this. Well, but of course, there was a big BCR team, but we have so many other people who are helping us to make this a successful event, and I just wanted to mention really some of them. Interpreters, hotel staff, the hospitality teams, the MC, AV and technician. And then again, our thanks go to the government, police and security. Immigration and protocol. Performers and dancers. Drivers and ushers. Vendors such as, is it Prime Producciones? STB Comunicare, Sin Retorno, Media Solutions, Deli Banquete, Let's Move and Promueve, all these vendors. So it must have been a good organization of this GPF, not only because you could feel it every day, and honestly I didn't, normally I would receive something like that, but I did not receive any complaint. There was not one complaint. And there's a good indicator that it was a good organization, because somebody from my team came, and that's really something, and came to me and said, this is an organization we have never had. Some of my team members said that. So I think it's a testimonial that I think we should take home with us. So thank you for everything. Thank you, Banco Central de El Salvador. And as I usually say, I'm sad to leave, but it's over when it's over. Meaning that, okay, we are going to ring the gong, but it's not over. So we still have an evening together, and maybe that makes it a bit easier to leave, because when I see you here, I don't want to leave you now, but we have to go home. We have to go back to our jobs. We have to work hard. I'm very aware of that, but of course we are very happy and looking forward to seeing most of you again next year. After all these things, I cannot forget one group, and this is our own team, the AFI team. And I would like to call to the stage the leader of our core team, who is Elike. Have you heard? They're asking for you. Please come. Elike, Susanna, Paula, Dougal, and Hazel. So these are the people who, from from our side, have almost everything under control, day and night. So thank you for that. But there is, of course, not only the core team, there are all the others from the AFI team, and I would like to call all my staff on the stage, please. Yeah. I mean, you can... So here you go. Thank you very much. Thank you so much. Now, before I end, this is not the whole AFI staff. It may look like, but it's not. There is another bunch sitting in Kuala Lumpur and elsewhere, and they also wanted, of course, to come. You know, every year we have a lot of internal debate: who's going, who's not going. So these ones, on the one hand, are the lucky ones. On the other hand, those are the ones who haven't had a lot of sleep in the past weeks and months. So we are very happy that you are here with us, and we will bring other people possibly next year as well. Thank you so much. Yeah. Now, I would like to end, Douglas and Hazel and the whole community here. There was an important sentence made by Senor Katan when he opened with us, and it was repeated today at the end of Douglas' speech, and he said to us, "Es su casa." Su casa, no? In es su casa means obviously it's your house. It's your house. Yeah. So, what do we take away from this house? I tell you what I take away from this house. I take away 5 wonderful things what I have seen. I've seen nice people. Nice people. Very nice people. Yeah? I think I have seen just a surface of a beautiful country, landscape, green, blue and brown, beautiful. I have seen lots and lots and lots of creativity. I've seen enthusiasm. Yeah? And I've seen, and this helps me to close because it closes the loop to, you can't see it, but it's the theme of this GPF. I've seen innovation spirit. Thank you very much for everything.
Thank you very much, Alfred. So, ladies and gentlemen, now we proceed into the tradition of closing our Global Policy Forum. Now, if you look at our gong, it has traveled to 12 different countries since its inception. What a lucky gong. Yeah? So, on that note, ladies and gentlemen, may I please invite His Excellency President Rodriguez, Vice President Gonzalez, the AFI Board Chair and Governor of the Reserve Bank of Fiji, Mr. Arif Ali, Dr. Alfred Hennig, the AFI Executive Director, and Mr. Miguel Catan, the Secretary of Commerce of El Salvador, to join President and Vice Presidente officially ring the gong to close the 2024 Global Policy Forum. Ladies and gentlemen, with that, the 2024 Global Policy Forum is now officially closed. Thank you very much for your participation. Please note that tonight's celebration dinner will be in Salamanca. I've been informed that for those that is traveling early, you need to pack your bags tonight, because we are not going home until the wee hours of tomorrow morning. So, buenos tardes, good afternoon, and see you in Salamanca later.
Everybody can come up to the stage for photos and everything as we normally do.
Yes. And the stage is open. If you want to take a photo around the gong, on the stage with your delegation, etc., it's open.
And no music.
And let's play some music. Thank you, Alfred. That was good.